This is Taking Stock on Bloomberg. I'm Pim Fox. America, it's getting older. And for our next guest, that raises a critical concern because for all the discussion about health care reform, cost savings are going to be paramount. Juhng is a healthcare analyst and expert in the field at BB&T Capital Markets, and he joins us now. Newton, welcome. Good to have you with us.
Thank you for having me back, Pim.
Newton, frame the debate right now because I want to talk about what's going on in home health care, and it doesn't seem as though that has been very high on the list, at least in terms of public perception when we talk about health care reform. Is this an important segment of the healthcare industry?
It's very important. One of the things that people need to keep in mind, it is the lowest cost environment for healthcare. When you talk about nursing homes, you talk about hospitals, you're really talking about places that have very high overhead. They've got to staff different types of medical professionals. When a nurse is coming out or a therapist is coming out to your home, you are really carrying the overhead with your own residents. So it makes it a lot easier for them to do more effective care. Now, not everybody qualifies for home health care, but for those that do, it's a very important aspect of the healthcare continuum. And because it is the lowest cost environment, we really look at it as extremely important for the future because of the cost issues that we're talking about here. You shouldn't have a person in a nursing home when they could be serviced to the home, not just from a point of efficacy, because at the end of the day, that person is probably going to prefer being in their home than being in a nursing home, but from a perspective that these people are going to get better care over the long run.
Talk just about the cost for just a second, because, you know, typically this involves now the insurer. I mean, is there a situation right now where you're getting the reimbursement at a level that makes home health care management the kind of business that people want to be in?
We're starting to see better reimbursement on that front. One of the things that needs to be kept in mind is that Medicare really prices the environment. Now, Medicare pricing is dictating that they've made a lot of money and they're looking to cut that in the near term. But longer term, we're really looking at the volume trend being the important part here. Once it gets rebased, then we can move forward from that point. The point that we'd like to make is that there are certain companies out in the space that have relatively large market share in a very fragmented market. While that doesn't sound like much, 5 or 10% of a given marketplace is a lot when it's really fragmented. As we look forward, we look at those companies as the ones who are going to benefit if there's a pricing cut, because there will be a consolidation trend that follows that.
All right, you talked about the idea of reimbursements. What about the idea of, you know, the sort of patient mix, so to speak? I mean, do you have situations where you have chronic, ongoing conditions that are more intelligently met with home health care as opposed to, let's say, post-surgery type of care? Is there a breakdown in the marketplace that investors should at least be aware of?
We absolutely believe that these people have a importance of going into those environments. The home health environment for those type of people is extremely important. So we'll continue to monitor it, but the way we look at it is that setting, that environment in the home is becoming more and more specialized. There's ability to go after more. Two companies that we cover, Amedisys and Gentiva, run specialized programs specifically geared towards trying to get people if you have an orthopedic injury, you've broken your hip, why would you want to stop specialized care at the hospital level or even at a post level? You would want to go all the way to the home. You want to
continue that at home.
Exactly.
Let's talk about Amedisys. Talk about the company, because there were some problems during the summer, had to do with some management changes, I believe. Stock sold off rather hard. What was your take on the situation?
So they did lose their president and COO as well as their chief information officer. They exited towards the end of August, and as we look at it going forward in early September, this was a situation where there are key executives. The stock sold off as a result of it. However, longer term, the company does need to replace those people and need to put in quality people. But from a perspective of the inner workings of the operations, we still think that the company is in very good shape and good position because of its positioning in the marketplace. Get the right executives in and move forward. We look at Amedisys, they've fallen off and recovered since that event. But you look at Gentiva and another company, LHC Group, in the space, and those companies have moved up 20–25% since that time period, whereas you look at Amedisys and they're relatively flat. We think the value there is in Amedisys going forward. They're only trading at 9 times our 2010 estimates. times. That is a very low level. The industry is at almost 12 times. The leader from a valuation perspective is actually LHC Group, and they're trading at almost 14 times. So there's quite a bit of room to go from Amedisys to the leader, LHC Group.
Now, Amedisys, symbol AMED, I mean, they raised guidance, right? So you've got to pay attention there. Why did they raise the guidance?
Well, they raised the guidance and then they reiterated it after the executives left. The fact is that the overall marketplace is running really well. They continue to, as they go after these specialized cases, they tend to be sicker people. They tend to have a greater amount of revenue, and they're able to make a little bit more money on each of those cases. As a result, their bottom lines have been going up. We've seen Amedisys actually is doing almost 50% increase in 2009, relatively flat in 2010, but that's because we've actually incorporated in a pricing cut, and that's what's out there right now. Healthcare reform, Senator Baucus has put out a proposal here where he's talking about some of the cuts. That actually was a little bit better than we were expecting, and so the stocks have run a little bit on that news as well.
All right, so you've got a buy recommendation and a $61 price target on Amedisys, AMED. Talk about Gentiva. You mentioned that. Give you about 30 seconds. How are they going to maintain margins?
We think that they're very good at consolidating. So from an M&A perspective, we think that they're going to continue to go after the weaker fish out there. There's a lot of mom and pop shops, a lot of private equity-backed groups that run home health agencies. We think that they're going to continue to acquire those. The key here is preservation of EBITDA. We think that they're going to continue to preserve their earnings. It might be the margin profile of the business might take a little bit of a hit, but we think that longer term they're going to be able to reset the bar on that and then grow the earnings from there.
All right, and you've still got a buy recommendation on the shares of Gentiva as well.
Still do a little bit weaker. Our call in the space is really Amedisys.
All right, we're going to have to find out what happens there. Appreciate you coming in, Juhng from BB&T Capital Markets, sharing your expertise.